Hey, buddy. This is Tuesday, July 19th, and we're just going to look at one position, simulated option hybrid trade. And we're looking at the position focusing on September 16 expiration, which was started on July 11 with 66 days to expiration. All right, so let's take step one down and just look at our statement here. Okay, so right now our our deltas are -3. Theta is coming in at $54 a day, and Vega is pretty much non-contributory to the risk factor here. We have a P&L open of $350. So overall, Theta Vega ratio looks good. Delta to Theta ratio looks good, but I'm watching that. We're less than 10% still. We don't want that to get over 10% of Theta, which would be 5. So once we start getting up in the 5 and the 6, we'll look at the position and the Analyze tab, and we'll make a move from there. Currently, the profit is still positive, 380, and that came down today. So we'll look at the chart first. So what's happened today is that the SPX has gone up 93 points. We're looking at the futures here. 93 points or 2.45%. That's a big move for SPX. The average true range has been around 70. So we're almost 2x, almost that, like 1.5x that. The VIX is dropping down because of this upward move, now at 24.43. So our position is, it's staying in, it's still in profit, and with the up move now, the deltas are negative. So that being said, let's go to step 2. Let's look at the position, the actual trade page, and see where we are with our wings and whatnot. So on the put side, we have 10 put credit spreads at 23 delta. That's good. We have a calendar spread now at 41 delta. That's pretty good. That's still around the neutral. When things start getting in the 30s, that's when I want to kind of do something, either add a calendar or adjust. That's the put side. On the call side, we have a call spread at 10 positions at 38 delta. It's good. And we have a vertical that we put on for protection a while ago at 58 delta. 6 long vertical spreads there. Okay. So this is now, let's look at the Analyze tab and see what this looks like. All right, so here we are, and we're at 3923, and our break evens, this is our T+0 curve. We're doing pretty good on the T+0 curve, and our break evens are here at 3991 to the upside. All right, right here. So right around 39.90 is when we start losing on this position, okay? And, if the market continues to rally. The market goes down, we got a long ways to go before the market gives us trouble on the downside. So I'm not worried about the downside. I'm watching this up move that's happening. And if we start getting around 3991, I'm going to look to hedge a little bit. Okay, how would you do that? Okay, so at 3991, this price here, look at our deltas. We are -6 deltas. Our theta is still good. Our Vega's to theta ratio is still good, but that's when we have a P&L open, going into a loss. So we want to hedge this around that price, 3991, for that reason. We don't want to get into a too negative territory. All right, so, and remember, this is T plus 0 today, right? So if this event happens today, this is what our Greeks will look like, all right, at 3991. So what we're going to do is we're going to get this hedge ready, and we're going to go into the trade page. And here's our current call position hedge. Okay, so what I'm going to do is I'm going to buy a vertical. I want to add to that position. I don't like getting messy and having 15 different, verticals. So we're just going to add to the existing one. Okay, now if we go with 10 at 3991, that kind of neutralizes our delta and takes it down from 6 to -1. Our theta vega is still good. I like that. And our P&L open remains intact. That's pretty good. All right, so let's trim that down a little bit. We don't need to go by too much, So if we go with 6 verticals, that reduces our delta 50%. So here our delta is -6. With the hedge, it went down to 3. Our theta is 57, Vegas 15. That ratio is good. And our P&L open is still positive, almost $200. So I like that hedge. We go down to 5 or 4. See, that's not enough, because we're back. We want to keep this number 10% of this number. This delta 10% of theta. So I would want to see like 5 to 7 verticals, long verticals put on, or something like that. That would be 325 each times 7, about 1,500. Right? 325 each times 7 would be 21 something if we put that on. Let's see what that looks like. Yeah, 2,200. Okay. Now what that does is it not only it keeps us in the game, but it also keeps us protected all the way up to our our exit point, which is 4,048. Right? I mean, we only lose $15 if it gets up to the short call spread. So we're gonna keep that on the side, continue to watch this thing. You can set an alarm at 3991 and walk away from the computer. And hopefully the market won't do that, and we'll just continue collecting theta, right? Day by day. If it does do that, we have a plan. The other thing that's, kind of not necessarily hurting us, because the theta vega ratio is good. But the thing that's hurting us is that this position is positive vega, and the market is, the market is going up, and so VIX is going down. That's why this position is kind of suffering a little bit, but not bad. Hence the reason why we trade option hybrids. If you were in just a iron condor, let's see how you'll be looking right now. Okay, so if you were in just an iron condor, look at your vega to theta ratio. It's like 5. It's like, 5 to 1, right? So you would today, you'd be $259 down just on the VIX move, because the VIX went down a couple of points. You'd be like 300 down just on the VIX move. But because we had the embedded calendar, we still are in a better position. So that's that, and I hope that you understand how option hybrids can really change the game for you. It's really changed the game for me, and in terms of minimizing loss. Okay, like I say before, this thing is going to expire worthless. Whether you're inside the break-evens or not, it's going to expire worthless. If you're inside the break-evens, great. You're making money. If you're outside of the break-evens and you don't know what you're doing, you're going to lose a lot of money. And this kind of strategy allows you to stay out of trouble before the thing starts accumulating on you. Okay, let me know how you guys appreciate this video, or if you have any questions, and have a good day.